Hi, welcome back to the channel. I have a question. Is the economy bound to crash? No one's certain, but there are several indicators that suggest it might. Today we'll delve into 4 signs that could indicate we're heading into a recession soon, and wait until the end. The last one might just blow your mind. 1. Declining consumer spending. One of the most telling signs of an impending recession is a significant decrease in consumer spending. When consumers tighten their belts and reduce their discretionary purchases, it can have ripple effects throughout the economy. This decline in spending often reflects heightened economic uncertainty, job insecurity, or a reduction in household income. People may delay big-ticket purchases, opt for cheaper alternatives, or cut back on non-essential items altogether. As consumer spending accounts for a significant portion of economic activity, a sustained downturn in this area can signal broader economic weakness. Retailers, restaurants, and other businesses reliant on consumer demand may experience declining sales, leading to layoffs, reduced hours, and even closures. Additionally, decreased consumer spending can impact supply chains, manufacturing output, and overall economic growth. Pay close attention to consumer sentiment surveys, retail sales figures, and trends in spending patterns to gauge the health of the economy and assess the risk of recession. 2. Credit market tightening. Another red flag signaling a potential recession is tightening conditions in the credit market. When lenders become more cautious about extending credit or raising borrowing costs, it can restrict access to capital for businesses and individuals alike. This tightening of credit conditions often stems from concerns about rising default rates, deteriorating credit quality, or broader economic uncertainty. Banks may tighten lending standards, increase interest rates on loans, or reduce the availability of credit lines, making it more difficult for businesses to fund expansion projects or for consumers to access financing for major purchases. Moreover, a contraction in credit can exacerbate economic downturns by limiting investment, dampening consumer spending, and stalling economic growth. Keep an eye on indicators such as credit spreads, loan delinquency rates, and corporate bond issuance to monitor changes in credit market conditions and assess the risk of a recession. 3. Global economic headwinds. In today's interconnected world, economic developments abroad can have profound implications for domestic economic conditions. As such, global economic headwinds can serve as early warning signs of a potential recession at home. Factors such as slowing growth in major trading partners, geopolitical tensions, or disruptions in global supply chains can dampen economic activity and weigh on domestic growth prospects. For example, a slowdown in China's economy, as a major importer of goods and commodities, can impact demand for exports from other countries and ripple through global markets. Similarly, political instability or trade disputes between major economies can disrupt international trade flows and hinder economic recovery efforts. Pay attention to developments in key international markets, trade agreements, and geopolitical tensions to assess their potential impact on domestic economic conditions and the likelihood of a recession. 4. Government policy response. In times of economic uncertainty or recessionary pressures, government policy responses play a crucial role in shaping the trajectory of the economy. Policy decisions related to monetary policy, fiscal stimulus measures, or regulatory reforms can either mitigate the effects of a downturn or exacerbate economic vulnerabilities. For example, central banks may lower interest rates to stimulate borrowing and investment, or implement quantitative easing measures to inject liquidity into financial markets. Similarly, governments may implement fiscal stimulus packages to boost consumer spending, support businesses, or invest in infrastructure projects to spur economic growth. Keep a close watch on government actions, policy announcements, and legislative developments to assess their potential impact on economic conditions and the likelihood of recession. What do you think? Leave your comment below. Thanks for watching. If you made it this far, leave a like and share. Next, we'll be talking about surviving financially through a recession and what to do. Stay tuned.